Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. Here are the headlines. It's a weak start to the trading week for the markets. The Nifty trades around 11,250. Most sectoral indices are trading with cuts. Open interest has surged in Havells and Manappuram Finance as traders take fresh short positions in their respective futures. And ICICI Bank is the top gainer on the Nifty after a strong first quarter performance. The stock is contributing almost 20 points to the Nifty's upside. And the gains in ICICI Bank are being offset by auto stocks. Bajaj Auto, Hero Moto, Tata Motors and Eicher Motors are all declining, and the top 5 of the Nifty losers. And Indiabulls Housing Finance is the top loser on the Nifty after after allegations of money laundering resurfaced once again.
Okay, so those are the top headlines for you at this hour, and let's look at the markets. After falling for last 3 weeks, Nifty started the new week also on a negative note. It's day 2 of the August series, and Nifty is trading with cuts of about 0.4% at levels of 11,240. Remember, day 1 of new series on Friday, we did see some bit of unwinding coming in on the futures, which is very rare. And as of now, we're not seeing any major build-up, just about 2.5% higher. But I do want to point out that the premium, which closed at 43 points on Friday, has contracted to about 26 points as we speak. So clearly there is selling coming at higher levels, as we can see premium also falling. Bank Nifty is seeing some bit of outperformance owing to the gains that we've seen for ICICI Bank. Bank Nifty just about trading flattish. It may have come off the high point of the opening level, and there is some bit of OI addition also seen 5% higher, but the premium here too has come off a bit. The futures are trading with gains of with premium of about 90 points. And volatility index fresh start to the week, and you're seeing India VIX inching higher by almost 5.5%. May not be a great sign for the bulls, inching very closer to the mark of 13. I do want to pinpoint the broader markets. Both mid-cap as well as the small-cap index are seeing sharper cuts compared to the benchmark. So mid-cap index down about 0.8%, and the broader markets, the breadth is also on the weaker side. If you look at the entire listed universe, as you can see, the gap is only widening. It's almost 1:2 in favor of the decline. So what sort of levels you should watch out in today's trade? If you look at the options data for this weekly expiry scheduled on 1st August, Thursday, maximum open interest, which was at the 11,400 call, now it has shifted to 11,300, as we've seen almost 11 to 12 lakh shares being added on the 11,300 call. On the put side, maximum open interest as of now, it is at the 11,200 put. So if you look at the premium also in these strikes, we're looking at a range of about 11,150 on the downside to about 11,300 on the upside. And of course 400 becomes a it is a resistance mark, which a lot of technical analysts have also been indicating. So wider range can be 11,150 to about 11,400 on the upside. But clearly, Agam, the way things are panning out and how FIs continue to sell in the cash segment, the data from the index futures has also not been encouraging. They started the series with being net short on the index futures, and the ratio has now fallen to sub 40%.
Yeah, absolutely. Well, not encouraging in least. And it's evident in the data that we have for you right now. So you can see the shorts are mounting there. But let's talk about stocks which are also seeing a surge in open interest. And we've already said that there are at least 2 stocks out there which are seeing an increase in open interest with a fresh, short build-up coming in. So let's pull up that list of all the stocks which are seeing a surge in OI. So we do have Havells India, Indiabulls Housing Finance, Muthoot Finance, Manappuram Finance. And Vodafone India is down 18%. It's all right. Yeah, there you have it. There's going to be a lot of pain there, and all these stocks, all of them are declining substantially, and all of them are seeing a surge in open interest. Vodafone Idea now comfortably and well below the mark of 10 rupees per share. Certainly a lot of concerns there on the back of the poor set of earnings that we've seen. Are we looking at any unwinding? I reckon it may not be as much, considering it is early in the series. But yes, you do have Indian Oil Corp, Hexaware and SRF, which is also seeing a little bit, just a little bit, not too much to speak for, but not surprising. Again, Navneet, it will once again be about earnings, and Vodafone Idea is certainly a very unpleasant surprise for many.
That's right, Agam, and we'll continue chatting about all these stocks, but 3 stocks where we would like to take views from our technical experts who will be coming on the show. One of them is ICICI Bank, which is lending support to Bank Nifty today and also to Nifty. So that's trading above, that's moved above, by the way, its 50-day moving average. We'll see if there is more upside left here or not. The stock remains an outperformer on year-to-date basis. It's up about 20%. Havells, a miss on all parameters. The numbers did not look good at all, trading below 200-day moving average, and after a gap down opening, we are witnessing short positions on the future side. And the other one are your two-wheeler stocks, Hero Moto as well as Bajaj Auto, though the entire auto pack seems to be down because of the news which came in over the weekend of higher registration charges. But both Bajaj and Hero Agam are your top Nifty auto losers and also among the Nifty losers.
Well, I guess we can get in our experts for the day, but before that, here's a reminder: if you have any queries regarding futures and options, you can call us on 022454044141, or of course, write to us on Twitter, Facebook, and YouTube with the AskPQ hashtag. To get in our experts for the day, then we have Amar Singh of Angel Broking and Namneet Daga of Yes Securities joining us. Good morning to both of you, and thanks for taking the time out. Amar, I come to you first. More concerns on the benchmarks. How are you reading cues here?
Yeah, I would say that looking at the benchmark indices, clearly I would say there is selling pressure, there's no doubt about it. And technically also, if you look at the daily charts or the weekly charts, clearly shows that there is selling pressure at higher levels. And even with the monthly charts, if you look at the indices, what we are seeing is there is bearish divergence on the monthly charts as well. So clearly that shows that there is going to be selling pressure further. And earlier I was hearing that the range which was rightly mentioned, 11,150 on the downside, 11,350, 400 on the upside, that's the range for Nifty. And what's likely to happen is that any move towards 11,300, 350 levels would be sold into because 11,400 now acts as a very crucial technical and psychological resistance level. Whereas on the downside, if you look at the May low was somewhere around 11,108. So somewhere around 11,100, 11,400, that's the range with a bias towards a negative. So we could see some consolidation. High levels will be sold into. Looking at Bank Nifty, I would say Bank Nifty also, if you look at Bank Nifty particularly continues to be strong comparatively on the monthly charts as compared to Nifty. So that's a positive sign for Bank Nifty, because on the downside, Bank Nifty has got very strong support coming at around, if you look at somewhere around 29,000, if you look at 29,100 and below that 28,800, 850, that's a very strong support zone for Bank Nifty. However, on the daily charts, what we are seeing is that the trend remains bearish. It's in oversold territory. It's close to support levels. That's the reason we are seeing this bounce back, but higher levels again will be sold into. On the upside, Bank Nifty would meet with resistance somewhere around 29,700, 750 levels. So high levels are likely to be more used for shorting opportunities, and we could see some consolidation because we are approaching two very crucial support zones for Bank Nifty. That's 28,800 levels.
Okay, so that's the view coming in on Nifty as well as Bank Nifty. Hi Navneet, good morning to you. How are you viewing the trade this Monday morning? Is there any fresh position that you would advise to take either on Nifty or on Bank Nifty?
Hi, good morning. Look, as you clearly explained that the FIs have been quite negative on the markets. I mean, bearish positions at the start of a month has been created. It gives you a signs that basically the upside to this market to the extent of somewhere near 11,400 to 450 odd levels is likely to be capped in. And the only caveat is where the fall is likely to be arrested. And to my understanding, and somewhere in the levels is 11,100 odd levels on the Nifty. This trading band will suffice in for the current month, whereby we got a lot of news flow driven movement likely to happen, whether the Fed policy event as well as we got an RBI policy event. So to my understanding, the likely outperformance of Bank Nifty is likely to continue, given that the kind of big setup that we are seeing in a index in terms of auto stocks as well as Reliance is ranking the market lower on the Nifty side. So there would be a kind of a bipolar kind of a nature would be clearly been visible, where the banks clearly outperforming the markets and led by the heavyweights in the private sector banks. So this trading band is likely to continue with by 11,100 is likely to be important, very important, crucial support zone that's likely to be achieved in this month. And on the higher side, any incremental rallies towards the 11,400 to 450 odd likely to be sold into. So that trading band has to be played for this coming week or so.
Okay, well, that's as far as your futures are concerned. But, moving on, if we actually consider, what we are actually looking at. Okay, so we do have a covered call all right, so we do have a covered call from Navneet. And, before we actually talk about that Navneet strategy, a covered call is a strategy employed when an investor holds a near-term neutral view with a positive bias on a security. And this involves selling a call option of an asset in which the investor has either bought securities in cash or, for that matter, is invested in the future. So with that, Navneet, if you could take us through how you're employing this particular strategy.
Basically, as I explained, that largely the positive bias is seen in the private banks, and that's been visible in the bank Nifty's outperformance. And to my understanding, this fall that we have gotten in the morning in the bank Nifty is likely to be one can look into the buy into the futures, and one can create a covered call strategy by buying an index futures in the range of 29,400 odd levels on the futures side, and simultaneously sell 29,600 calls, which for the current week, that is for the 1st of August. One can sell this call in the range of 80 to 85 odd points, and one can keep a strict stop loss on the lower side of 29,230 odd levels. That's where one can see if that level has been broken on the downside. One can see that continuation of a downtrend happening. So I'm expecting a probable kind of a mild outperformance trade in the bank Nifty, given the positive bias that we have seen after the ICICI results.
Okay, so that's a covered call strategy coming from Navneet on Bank Nifty. But let's also get you some stock-specific ideas for today. Amar, which are the stock futures where you are placing your bets?
Yeah, the first one is from the IT space, and that is Infosys. What we are seeing in Infosys is that Infosys has completely bucked the trend, and we've seen posted results. The stock has moved up, and technically also, if you look at Infosys, Infosys continues to be strong across various time frames. So that's one of the reasons I would like to recommend this stock for a buy. So currently it's around 792 odd levels, and any pullback towards 785 levels can be used as a buying opportunity with a stop loss of 753 and a target of 836 in the short term. And the second stock to look at is from the sell side, and that is Ashok Leyland. What we are seeing here is that the stock continues to remain extremely bearish on the long-term charts as well. It did consolidate for a couple of days, but then again has given way. So currently it's around 71.4. So I would say any pullback towards 73, 73.50, ideally that can be a very good level to short with a stop loss of 73.5, 75.3 and a target of 70 on the downside.
Okay, all right. And Navneet, what about you? Stocks that you're betting on today?
Look, I've got two shorting ideas. That is, firstly, similar Ashok Leyland. I believe that it has broken down, and we have been shorting, selling this stock since almost somewhere into 85 to 86 odd levels. It has seen a breakdown below that 75 odd support zone as well. So, to my understanding, one can initiate a short positions at this price as well, keeping a stop loss at 75. And I'm expecting that the downtrend will likely to continue and likely to accentuate in the range below that 72 odd mark. So my initial targets would be somewhere in the range of 65 odd. And second stock would be shorting idea on Tata Steel. Tata Steel has seen, if you look out at the weekly and monthly charts, it has seen a good accumulation in that range of 440 to 450 odd band. It has broken below that level. And we have seen metal stocks continue to reel under pressure, and given the kind of a downward momentum that we are in, one can see a downside target somewhere in the levels of 420 odd with a stop loss of 451. One can still initiate a short position and carry on for the August series.
Okay, so these are some individual stock bets coming from our experts, but let's also take views on the stocks that where we want to get the levels from our experts. And one of them is your top gainer on Nifty, a heavyweight both on Nifty as well as Bank Nifty, and that's ICICI Bank. After posting its numbers on Saturday, we have seen a gap up opening. And not only that, remember, markets were weak throughout last week, but ICICI Bank did close in the positive for the week. It was up about 1%, and this morning it's trading around the levels of 432. In fact, with today's move, it's also moved above its 50-day moving average. The numbers were, of course, on the good side, and that's the reason why we are seeing such a move coming by. Asset quality, the best in last 12 quarters. Slippages also declined nearly 22 to 23% on sequential basis. So, Amar, let me come to you with the move that we've seen now for ICICI Bank, an outperformer even on YTD basis, giving you returns of 18 to 20%. Would you expect more upside now at current levels? And let's say if someone's already missed in the move, would you advise taking a fresh bet on the upside?
I would say not at the current levels, because what we are seeing is that on 27th June it had made a high of 444 odd levels, and currently it's around 432. So that is acting as a short-term top, because if you look at those levels from almost 442, the stock corrected by 10%, and then again it has bounced back and currently trading on 432. Yes, technically the long-term chart, that is a monthly chart, is extremely strong for ICICI Bank. So effectively it means that any pullback should be used as a buying opportunity. Ideally, now the stock has formed some very strong support coming in the range of 415, 420 odd levels. So any pullback towards 420 odd levels can be a buying opportunity, with a stop loss below 410, a target of 440 on the upside, because till the time it doesn't take out the 444, 445 levels consistently on the upside, we could see some sort of capping on the upside. If that is taken out, then the stock is definitely headed higher towards 470, 475 levels.
Okay. Let's move on and talk about Havells India. We've seen the earnings come through. They haven't been up to expectations. And while the stock has been on a ever so slight decline over the past few weeks, today, of course, the fall is a lot sharper. It's down 7% today on an intraday basis. And, well, it's a little bit of a gap down opening too. So there certainly is a lot of, momentum towards the downside. And, well, many would suggest that if you consider the way things have panned out over the last few weeks, it has been making lower tops, lower bottoms. Navneet, would you initiate fresh short positions in Havells India at these levels as well? It's already lost 17% in the last 1 month.
Look, after the gap down opening, it has seen a kind of a shorting pressure that we have seen. An incremental amount of futures open interest been created, and with the gap down, and the crucial levels have been broken below that 660 odd levels. So to my understanding, somewhat braver traders can still be looking to go short on this with a small stop loss of 665. Any intraday reversal likely to be taking place near to that level. To my understanding, somewhere near to 620 odd levels is likely to be finding a lot of support zone. That's where the stock is heading. So any incremental rise during the day likely to be shorting, and one can keep a stop loss at somewhere near to 665. It's likely that the continuation of a more downside momentum is likely to happen, and stock can find a support in the range of 620 to 600 range on the downside.
Okay, that's Havells for you. And let's quickly address the auto space, which has been in focus. In fact, the Nifty Auto Index is your top sectoral loser, declining by almost 2.5% right now. And the stocks that we want to talk about are Hero MotoCorp and Bajaj Auto. Both of them are seeing cuts of about between 3 to 4.5%. Hero MotoCorp is down about 3%, and Bajaj also seeing cuts of about 4.5%. Amar, on these two auto stocks, or I'm opening the space for you because the entire auto pack has been weak. Is there any stock where you would advise taking any position?
Yeah, I would say overall, in terms of Hero MotoCorp, we are seeing that the stock seems to be forming a bottom, because overall the long-term trend definitely remains negative. But on the weekly charts, we are seeing some sort of bullish divergence. Daily charts also we are witnessing. So if the stock consistently manages to sustain above 2450, 2460 levels, then we could see some temporary respite in the stock, and the stock could bounce back towards 2560, 2570 levels. So looking at other stocks in specific, I would say if we look at TVS Motors, here we are seeing that this stock has approached a very crucial support zone. So there is a possibility that we could see some temporary respite in the stock and a bounce back in TVS Motors. So if the stock manages to sustain above 370 levels, then one can initiate some long position towards targeting towards 390 odd levels, with a stop loss below 355.
Okay, all right. On that note, we move on to queries. And we take the first one from Manikant. He wants a view on Axis Bank. And, well, actually, he wants a view on a specific call option of Axis Bank. That's the 740 call option ahead of results. Let's pull up where Axis Bank currently is. So, firstly, the stock, that is its underlying, is currently at a 720. That means that for this particular call option to go in the money for Axis Bank, it would need to make another 20 rupees and over that. Currently, it's quoting a premium of around 18 points, and it is losing out a little, but that's also because Axis Bank is down today in trade. So, Amar, I'll come back to you on this question on Axis Bank. Firstly, your view here, levels you'd watch out for, and whether or not you would buy this particular call option, or for that matter, actually go short on this particular call option on Axis Bank.
Yeah, I would say looking at the trend for this particular Axis Bank clearly shows that the stock, overall the short-term trend remains negative. But the stock is close to a very crucial support zone on the monthly charts. So I would say that if the stock manages to sustain above 725 odd levels, then there is a possibility of rally towards 740 odd levels. So ideally he should hold on to his position. And if the stock manages to sustain above 725, then he can expect some upside rally towards 740-45, and he could be in the money in his call option.
Okay, that's about Axis Bank. Let's move on to the next query, and this one comes in from Tamil Selvam. He's bought the weekly Nifty 11,250 call strike after paying a premium of 60 rupees. He's suggesting currently that position is trading with a little bit of losses. He wants to know if he should wait it out or he should exit this position. And if you could just pull up that strike, yes, he's bought at 60 and the current premium is at 51. Navneet, what would you advise him to do?
As I said, that basically we are likely to see a lot of supply zone on the Nifty, and it's very unlikely that we are likely to see a major upside on the Nifty for the current week. Buying a call options likely to give away the theta value as well as the Vega. It's not prudent that one need to continue to hold on to the strategies. One can see a mild pullback, but during the day it's looking likely that once a level of 11,220 odd level has been taken on the downside, so that's where we're likely selling pressure likely to accentuate. So to my understanding, one can keep a trailing stop loss kind of a level whereby one can monitor the level of 11,220 odd on the downside on the futures. If that level has been also been taken out, one can see a selling pressure accentuated. Until unless that has not been violated, one can keep a hold and hope for the market to give you a kind of an exit at your cost price. But certainly it's looking like that one should look to exit the strategy rather than being holding on for expiry.
Okay. All right. Moving on. The next query is from an F&O student, and this one is on the Nifty Bank 29,500 call, and it's the weekly option, that is the expiry which happens this week, and he's bought it and paid a premium of around 100. If you can pull that option up, it's currently at 112, so making a 12-point profit currently. The August 29,500 call, which expires this Thursday, this coming Thursday. Amar, how would you address this query? The options been bought, sitting at a profit. Would you advise him to book profits or hold on?
He should hold on, but he should keep in mind that the short-term trend remains negative for Bank Nifty. So what we are seeing is a pullback also because of ICICI Bank. So what he should do is watch out for one level on Bank Nifty, and that's 29,375, 380 levels. If that level is breached on the upside, then there is a possibility that it could rally towards 29,550, 600 levels, which could be a level where he could book his profit in his call option.
Okay, let's quickly take a view on Dr. Reddy's as well. Ram has written to us. He's bought the 2,800 call strike, which is out of the money call strike after paying a premium of 64. Remember, the company also comes out with its quarterly earnings today, so it will be in focus. He wants to know if he should hold on to his position. I believe the current premium on the 2,800 call strike has slipped below his buy price of about 64 rupees. Amar, what would you advise, considering the earnings also come out today for Dr. Reddy's? If somebody's bought out of the money strike like 2,800 after paying a premium of 64, should one stay put or exit?
I would say that he can hold on to his position because on the daily charts the stock looks positive. On the monthly it's I would say neutral to positive. On the weekly it's moved from the oversold territory, so there is a possibility that we could see some upside in the stock. What he needs to watch out is 2680 on the upside. That's a technical level. If that is taken out during the day, then we could we could witness a spike on the upside. On the downside, very crucial support comes somewhere around 2630 odd levels. So these are the levels that he should watch out for.
Okay, I think we have time to just take one more query, so I'm going to take that up very quickly. Kotak Mahindra Bank, we have Lalit, who is interested in selling the 1560 Kotak Mahindra call. It's of course the stock is currently at 1518, so about 40 points before it could go in the money, but he's interested in selling it. So he wants to sell the Kotak Mahindra Bank 1560 call, currently at a premium of 21. Navneet, would you recommend such a move?
Look, this stock is quite a bit resilient in the entire banking pack, and it's showing that the stock which is moving near to that lifetime high mark and somewhere near to 1540 odd. It's not looking likely that it's threatening to break out above that level that very easily. So to my understanding, even if it's shorting, one can keep a stop loss of somewhere near to 1540 odd on the closing basis. If that level will also be taken out, there's chances that the momentum, the stock might find a lot of momentum after that, and once we might see an accentuated move on the upside. So I'll say that comfortably one can sell it right now and probably keep a stop loss on somewhere in the levels of 1540 on the futures. If that level is taken out, one should look to exit in the strategy.
Okay, let's quickly revisit the markets, and the picture is not looking great at all. We're almost at the low point. 11,234 is where the index, 239 is where the index trading with cuts of 0.5%. Bank Nifty still managing to holding about in the positive territory, and that's solely because of the positive tick that we've seen for ICICI Bank. Broader markets are also under pressure. Mid cap, small cap, both seeing cuts, and the market breadth has also deteriorated. Just want to address a couple of stock futures. ICICI Bank, of course, we've already addressed. Besides that, M&M Financial, Marico, Tech Mahindra, a couple of other stocks which are managing to hold up in the green. They've seen gains of between 1% to 1.5%. Idea on the other side, which is still in the futures and options space, is down about 24%. It's become a penny stock, 7 rupees. Indiabulls Housing is down 8%, and Havells we've already addressed. And Reliance Infra and Reliance Capital, remember both the stocks will be coming out of the F&O space post the September series, are seeing cuts of about 5 to 6% respectively.
Okay, there you have it, guys. On that note, I'm going to take a moment to thank both our experts, Amar and Navneet, for joining us and taking us through their views and solving some of our viewer queries. For more updates on the F&O space, you can also check our website out, specifically the futures and options pages.
All right, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching, but stay tuned to Bloomberg Quint for more news and updates.